All right, good morning, good afternoon, everyone. Thank you for joining us on our first ESG webinar hosted by the GSMA. My name is Alix Jaguenot. I'm the Head of External Affairs at the GSMA. And for those who don't know us, GSMA, we are the global industry association representing mobile operators worldwide. So today we're going to be discussing ESG performance. How do we accelerate impact and performance in the mobile industry? For those of you who are maybe not so familiar with the topic, ESG stands for environmental, social and governance issues. And you might have noticed the real explosion and increase in attention around ESG in the past, let's say 3 to 5 years. It's really become frontline in a lot of discussions and on the board agendas with investors, which is leading to positive developments as we see investors really making ESG central to the decision making in their decisions. But we also see increased scrutiny around companies and what businesses claim is good ESG practice. So to try and navigate that at the GSMA, we have been working with operators for some time now to accelerate ESG performance and to really look at what, as an industry, should be considered most material. Where do we have most of an impact? What are the risks associated to deploying mobile broadband networks across the world? And how do we really measure progress and efforts being made by different operators? We're going to talk today about the ESG Metrics for Mobile framework that we have launched a couple of weeks ago together with mobile operators and with our partner EY, who is with us on this event today. You'll hear a lot more about that throughout the discussion. We're going to talk about how do we communicate about ESG performance, how do we measure impact, how do we really talk about that with investors, with shareholders, with employees, but also about, in the communities where different operators operate. Praveen, you are the UK and Ireland TMT market lead at EY. Thank you for joining us today. I know you have a busy schedule. And I'm going to turn to you if you could set the scene, and just give us a bit of context around what you're seeing actually in the market currently around ESG and the impact it's having on telcos. Over to you, Praveen.
So first of all, we are delighted to work with GSMA, and we are really excited to be talking to you on this very important topic. Sustainability and ESG topics are very close to our heart, as these are aligned to our purpose of building a better working world. And what I was also very delighted to see and was encouraged by was the huge interest and engagement from our clients once we launched this paper. So in the next 5 minutes, I'm going to talk about 5 key points to recap on the context of this work before Nadia walks us through the details of the KPIs. So the first one is the focus on ESG performance has never been higher. Our society is demanding this. Our investors are looking forward to this. Our employees, our clients, our consumers are all expecting that we take strong actions on ESG performance. 76% of consumers say that they will end their relationship with companies that treat the environment, employees, or their community poorly. 89% of investors say that they would like it to be a mandatory for the companies to report ESG performance against a set of globally consistent standards. And at the same time, better ESG outcomes can unlock greater financial value. 70% of the enterprises are interested in 5G and IoT use cases that can help them meet their sustainability goals. And as you all know, carbon efficiency goes hand in hand with cost efficiency. Second point, mobile operators have a dual role to play in moving the dial on ESG, to transform their own organization and ecosystems, and to use their role as digital enablers to drive sustainability journeys of businesses across the sectors. And this sector has a significant influence to drive the sustainability narrative and shape the behaviors of end consumers. So there is a need of consistent set of industry-specific KPIs, which target actions on areas that will have the maximum impact. Our research shows that many operators find it challenging to fully report the information deemed to be material by the sector, And we see significant fragmentation in the way operators currently report against their key topics. For example, 96% of the top 25 operators report on energy consumption, great, but only 52% report on e-waste management, which is another big challenge for the sector. So with this context, we have defined the first version of the KPIs as small set of KPIs that are actionable. These are intended to be the starting point for driving consistency and comparability across the industry, and are focused on the most relevant topics such as environmental, digital inclusion, digital integrity, and supply chain. A few of these areas, such as digital inclusion, have been overlooked by the sector agnostic standards. And when we speak to the operators, they have expressed that their contribution towards such an important topic has not been recognized and highlighted enough. And the final point is to move from ambition to execution. Measurement is the first step. So I encourage all of the operators to engage with these KPIs, take them to the leadership team for buying, adopt them in reporting, and most importantly, based upon the results of these KPIs, drive actions to move the dial for the telecom sector and for our clients. With that, I'll hand it over to Nadia, who is going to take us through the details of this KPI framework. Thank you. Off to you, Nadia.
Okay, excellent. Thank you, Praveen, for this great introduction. So yes, we're going to hand over to Nadia. Nadia is our Sustainability Director at the GSMA. She's been working over the past year very closely with a group of operators and EY and other partners and experts to get to what we published last month, these 10 metrics, ESG metrics for mobile. So Nadia, I'd like to invite you to explain to us where we landed, why did we start this work, and then we'll have a great discussion and we'll start talking about some of the points that Praveen introduced during our panel discussion.
Thank you very much, Alex, and welcome everyone. I'd now like to take you through the details of the framework and the white paper which we developed and recently launched, and to share with you how this work came about and the value that we hope it will deliver. So a little bit of scene setting here. I think this has already been largely covered by my colleagues, Alex and Praveen. But basically, if you have already decided to attend a webinar on ESG metrics today, then I don't need to explain to you the sharp recent rise in attention being attracted by ESG data today and the importance being placed on it as an indicator of value that is expressed in some of the stats you see on this slide. But as you are probably aware, the current system of how ESG information is demanded by stakeholders and reported by companies and read and understood by analysts tends to be fragmented and inconsistent. This causes an overwhelming burden on reporting companies, receiving requests on unlimited topics and reporting against a multitude of different standards. Note the stat in the top left of your screen, and the data produced can be wildly inconsistent, rendering it far less useful to stakeholders. So therefore missing an opportunity for ESG data to be used as a really reliable indicator of performance and value. So the GSMA last year created a working group of operators who represent nearly half of the world's mobile connections. This group is in fact growing as this collaborative work continues on ESG. We worked in partnership with EY, with whom we jointly launched the white paper in June of this year. And we also worked with the Yale Centre for Business and Environment, who got us started off and guided us through some of the strategic elements of this process last year. Our objective was to create industry alignment and foster a more efficient system for measuring and communicating ESG data on the sector's most material areas and demonstrating value to its stakeholders. This resulted in the development of 10 core industry-specific and actionable KPIs. There are many developments taking place by global organisations and regulators responding to the need to create convergence and establish universal standards for ESG reporting. This is something that we are in great support of and have taken the World Economic Forum Stakeholder Capitalism Metrics here as an example of a universal reporting framework that we hope to see more operators adopting. However, to drive down to what is truly material and an indicator of value and societal impact, an industry-specific lens is also crucial, and we propose it as a layer to complement universal reporting adoption. So now we move on to the framework itself. The section in yellow shows the subject areas and indicators of the mobile industry KPI framework, ESG metrics for mobile. And in green is the areas covered by the World Economic Forum Stakeholder Capitalism Metrics, the universal layer I mentioned on the previous slide. So the ESG metrics for mobile framework, as I said in yellow, is structured by pillars of environment, digital inclusion, digital integrity, and supply chain. Some metrics are quite common sustainability areas that you would expect to see in most universal frameworks, perhaps, that at first glance aren't particularly industry specific, but what we've done is we've added that industry detail to the KPI itself. This is the case for some of the climate and environment indicators, for example, whereas for others, the material issue in itself is very unique to the industry. For example, those metrics under digital inclusion, we expect these metrics to deliver the value of informing stakeholders about the most material impacts and drivers of value for our sector, and also to amplify impact by encouraging strategic alignment on KPIs and potentially even target setting in these areas. We've selected these pillars to begin with, but this isn't to say that these are the only material issues for the industry. You will see in the green universal layer covered by the stakeholder capitalism metrics, these do cover other issues that we do already deem material to our sector. The finer details of these metrics can be found in the white paper, and if you haven't already, we do encourage you to take a closer look there. But well, of course, we hope you have already had a good look at our white paper. So moving on to the metrics, where possible, these metrics align to or are modified from those of existing international reporting standards and frameworks. So many operators will find that they are either already reporting or collecting much of this data, or something very similar, which relates nicely to this all-important criteria on the left, feasibility. It was really important when selecting these metrics that it was feasible for operators to adopt them, because that adoption and alignment was such an important part of the objective. So just to explain, the left, these are the selection criteria that were used in order to bring what was originally a long list down to just 10 core KPIs. And as you see, it's meaningful, decision useful, comparable, feasible, and the best indicator for the topic, really driving down to the heart of the issue that it's demonstrating. And moving on to the value, we identified values and benefits to both operators and stakeholders in creating adoption and alignment of this framework. To summarise a few of them, on the operator side, we hope that the reporting process should be streamlined and more efficient and focused on what is really truly material. It should support strategic decision making and create industry alignment on strategic goals, potentially amplifying impact and improving recognition from relationships with stakeholders, and so that they're better informed about the value being delivered. On the investor and stakeholder side, we hope they will be much better informed and have a deeper understanding of that industry-specific detail and context that can make the difference to the value being indicated in a given metric. It should provide the conditions and settings for a more accurate analysis and comparison of data. And overall, we envisage that the relationship and dialogue between company and investor will be greatly enhanced as parties are better informed and focused on what is most material. And the level playing field created could provide the setting for the future generation of much more reliable data, with which we hope to be able to demonstrate a more accurate correlation between ESG performance and financial value. So now just on my last slide here to discuss with you next steps, you can access the white paper and read more supporting materials on the website at GSMA/better future/ESG. And we have an open consultation period, which is open at the moment until the end of September, which we're incredibly keen to get as much varied opinion and perspective on as possible. So please do respond, and please do share with your contacts and stakeholders, encouraging them to respond too. And please do engage with us. Reach out to us with any questions, or if you'd like to join our operator working group, or any other opinions or involvement that you suggest. We are definitely here with our ears open, because that is what this collaborative process is all about. And for operators in this last step, we are really focusing now on adoption as the best way to realise and improve the value of this project. We will be providing more information in the coming months on this, but if you have any questions on the implementation of these metrics, please do reach out to the sustainability team here at the GSMA. So now I'm going to hand back over to Alex for our very exciting panel discussion.
Excellent. Thank you very much, Nadia. You know, great overview of the framework, of the metrics and the priorities that have been identified. So we're going to be able to discuss some of that in more detail. And I'm excited to invite our panelists to now switch on their camera and join me on the screen here. We have today with us Marina Madaleus, the General Manager of Sustainability and Shared Value at MTN. Tom Salisbury, Sustainable Business Manager at Vodafone. We have Dr. Todd Bridges, Global Head of Sustainable Investing and ESG Research at ESG Book, which some of you know until recently as Arabesque. And Robert Jenkins, Global Head of Research at Refinitiv. So great panel discussion. Thank you so much for joining us, the four of you today, and welcome. I'm really excited and pleased that we have both representatives from the mobile operators, but also like non-industry stakeholders and, you know, like ESG data experts who are going to be able to bring, you know, an outsider perspective and takeaways on what we're discussing today and this framework. I'll start maybe by inviting the operators, just because Nadia has just talked to us about the framework and the efforts that have gone into developing, you know, simplified metrics. Maybe I'll start with you, Tom, at Vodafone. Just like, you know, simply asking you, why did you decide to join, you know, efforts with GSMA and to developing this industry-specific framework? If you could tell us a little bit more about that.
Thanks, Alex, and great to be here today. I mean, I think one stat that really stood out that Nadia shared earlier was the 600 different reporting standards. I mean, that's an incredible amount for one company to navigate themselves. Yeah, so I think having a common framework as a sector is extremely valuable for all of us, and also, you know, the efficiency of doing that, you know, is clear. I think, you know, having a convergence of the alignments and kind of what are the most material areas for our sector is really helpful for us, because it helps identify, you know, these are the most material areas for us as a sector. But I think, you know, crucially, it also helps other stakeholders, you know, when it comes to, you know, whether it be investors analysing our performance, actually having that consistent reporting approach is very beneficial. You know, there have been many times where we've been maybe talking to ESG investors, and that there have been questions, but why you calculate it in this way and it's slightly different between different operators, and really you're comparing apples with pears. So I think this will really help to have that consistency, and you know, and I think that should really help reduce the burden, the reporting burden for the reporting entities, i.e. the operators, having that, you know, greater focus on really these are the most material areas and these are the most important metrics for those areas. I think, you know, will really help us be a bit more focused when you've got these 600 different reporting standards. And I suppose finally the one thing I'd say as well is, you know, one of the reasons, one of the benefits of reporting is actually to improve performance. I mean, that's what we ultimately want to be about. We want to be reducing our environmental impact. We want to be doing more from a digital inclusion perspective. And I think having this consistency will help, and particularly around targets. I think hopefully this could potentially accelerate impact as well, because we've got a much clearer idea of where we're going.
Great. Yeah, I like this idea of accelerating impact. You know, like measurement is only done with, you know, another end goal in mind. Marina, I'll turn to you. It was really a similar question. You are at MTN. MTN operates across 19 African markets, so very different geographic landscape. What are some of the challenges that you encounter, you know, when around ESG reporting? Especially, I'm thinking, keeping in mind, you know, the markets where you are present, which have their own region, you know, specificities.
Thank you very much, Alex. And I just want to say congratulations to yourself, Nadia, and the rest of the team on this momentum achievement of putting this framework together. I remember it was just probably about a year ago where we first had a conversation with Nadia, just saying, you know, there's a lot of ESG raters and rankers, and you don't see a lot of commonality. So there was almost this need to do something about it. And so we're very grateful for GSMA for, you know, getting the experts around the table, putting us all together, which has resulted in us being here today. I think as MTN, we're an organization that's driven by a core belief that everyone deserves the benefits of a modern connected life. So what ultimately we're trying to drive is both digital and financial inclusion. The kind of markets we're in are ones that you know, mobile adoption is very low, internet adoption is low, and so forth. And what you see is these emerging market realities. And most often than not, when you look at ESG rating agencies, there are some of them that do recognize the emerging market reality. There are others that don't. And it's unfortunate that some of them are very influential that don't take emerging markets into consideration. So I think that was one of the key challenges that we see, is just the reality of operating in markets such as ourselves, such as the markets that MTN is in. The other thing that we also picked up was that there's not a lot of ESG raters and rankers that particularly look at indicators or measure the essence of what the telecommunications and mobile sector does, which is ultimately digital financial inclusion. The only other sort of assessment we'd interacted with was WBA as an example. So there wasn't a lot. So when we engage with the investors, I've had numerous times where they say, okay, but you know, your digital human rights, how does it compare to others? You know, and so forth. So you can tell they're trying to, investors, shareholders, and other stakeholders are all trying to gain a knowledge of the sector. So there's a need to sort of provide that understanding. And I think this framework really does that extremely well in not only linking to what is material, but also what would have the greatest impact and enable that comparability.
Great, thank you, Marina. I'm going to turn to the non-operators on this call. Very keen to hear their perspective. Todd, you're at ESG Book. You know, your company is a leader in the field of data analytics. Your products are used by financial organizations. So, I mean, what's your reaction to what you've just heard, and you know, to seeing like an industry-specific layer of ESG reporting? Like, does that resonate with you?
It sounds perfect, and for the last 5+ years, as sophistication and public and private entities around the world become aware of the increasing complexities of ESG and climate data and reporting requirements, it makes perfect sense. We need to be very cognizant of the reporting burden we're putting on the public and private entities in the world, and that's exactly what I think Tom and Marina are emphasizing. We all agree that these are quote unquote material, and we'd like to have the capital markets calibrated based on this data, but to overwhelm every public and private entity around the world is not the smartest way to move forward. So yes, it resonates perfectly. Companies need to have a much more control and understanding and be able to communicate directly to markets what they're doing at a KPI digital data structure, right? And so yes, that is the emphasis of what has been asked of the market. Part of the project that we have been designing and building at ESG Book is maintaining a much broader set of 5,000 KPIs for all sustainable markets. But as Tom just shared, it's just too much, right? So, how do you make sense of that? How do you enable the corporations to be aware of all of the indicators? And then the GSMA and EY have done a fabulous job, I think, condensing it in collaboration with the WEF stakeholder metrics to get it to a manageable set of material metrics. So again, just opening full agreement, and I think we're all headed in the right direction.
Great. And maybe if I can just follow up on something you just said, like the fact that this work came from an industry, looking at what we deem to be most material, from an external perspective, is something that you think is fine. That the industry itself is self-defining, if you want, a little bit like what we consider material. And do you think also maybe other industries in the future will follow suit and go into that direction as well?
Yeah, no, I think it's mission critical for the industry and the actual designers and builders, or the operators in those industries, to know their business, to understand the material risk return drivers, in particular to sustainability and climate. There are, of course, industry-specific frameworks that I think Nadia did a fabulous job on. Some of the indicators are connected to the likes of SASB or GRI, which have industry-specific and some topic-level differentiation. But it's important for the operators and the standards bodies and kind of the industry groups to be in conversation, collaborations, right? We last thing we want is to have, not to be too political, but last thing we want is to have the European Commission come down heavy-handed without proper feedback on what types of sustainability data is required, right? And same with the US government. They're stepping into this space, and they're going to, but it's important for the companies and service providers and data analytics companies to help have that feedback loop into any future regulations in these spaces. And the industry group is setting the kind of innovation front and collaboration.
Great, thank you. Robert, you're global head of research at Refinitiv. Refinitiv is a global provider of financial markets data. You're part of the London Stock Exchange Group. In your engagement, with investors, I'm curious, what are the main ESG asks and the challenges that they're looking at, when they look to prioritize asset allocation? If you could talk a little bit more about that, and if you see, the benefits of an industry aligning behind a framework, helping to maybe address some of these challenges. So Robert, over to you.
Sure, thank you, Alex. When you think about investing 101, right? What are the main challenges for asset allocation? It's finding that right balance of risk and return for your goals. It's finding the right kind of underlying investments across the asset class sleeves. And it's refraining from thinking that you can outsmart the market, particularly during times like right now, and holding on for the long term. But when you kind of layer ESG on top of those three kind of primary drivers, all those challenges become even trickier, right? So because you want to make sure that your value is being appropriately represented across all the asset classes in your portfolio. And inherently, ESG investing in most every form you think about it, whether it be negative screening, positive, impact, integration, best in class, etc. Most all styles of ESG investing involve narrowing the investable universe of securities. And that means that you're going to probably reduce diversification. You're going to increase kind of cyclicality, volatility, and risk. So the main ask, I think, from investors let me have the needed transparency so I can understand, whether or not these investment holdings are actually aligning with my values. And, baseline kind of risk return metrics are pretty standard, right? SEC, FCA, GAAP accounting principles, et cetera. But transparency in the ESG world is anything but. So we have analytics providers like ourselves, like Arabesque and ESG Book are being called upon to help investors and indeed even regulators really along this path of finding that transparency and bringing it to investors. But it's really a difficult thing to do with any sort of simple kind of common framework that you can apply across different industries. At the end of the day, any sort of rating or ranking framework requires an understanding of industry-specific materiality metrics. And it's those materiality metrics and the KPIs that drive them. They're at the heart of what we really need to kind of look from industry to industry. So will investors, see a benefit from this? As a relatively objective participant in the ESG analytics space, there's a double-edged sword, I think, to industry involvement in KPI materiality development. So on one hand, if left entirely up to companies, you tend to find some self-serving metrics emanating from certain companies. This is greenwashing, right? Particularly in climate-sensitive industries. On the other hand, and I've been a part of these kind of analyses before, you absolutely have to have involvement of subject matter experts in any such exercise. You just can't do this work effectively without being a part of the industry and having firsthand insight across the various value chains of that company and that industry. So industry associations, I think, can be a great intermediary for this type of work, and particularly when you combine it with academia, who they kind of serve as a referee, right, to make sure that momentum doesn't start to shift to any kind of self-serving directions, and that the proper data and so forth are being introduced into the process. So I think overall, this is an excellent, I think, framework, and this is an excellent model for how others should go about developing industry-specific KPIs.
Can I just add one comment on that? Because I think, a really good example that I've seen on that for our sector has been water. So water usage for some sectors. I was previously in FMCG sector, massive, one of the top sustainability areas to be focusing on, big water risk, scarcity. But for our sector, it's not a material environmental issue. Climate change, e-waste sit above that, but you still have some indices who would negatively rank companies in our sector because of maybe not disclosing water usage in a way that they'd really want, or we're not showing the performance. And I think there are things like that. I think that's a really good example of where having that sector specific approach is really important, and some issues just don't work. You can't just judge different sectors by the same standard.
Yeah, agree. And I think that's exactly what, in our conversation at the GSMA with operators, and Marina, you also alluded to that at the beginning, right? It's like sometimes this feeling that there was not the right understanding, or of what really is material and the impact that the industry can have. This industry is also about bringing more people online, bringing in a safe way, in a trusted way. So that's why we looked at things like digital inclusion, for example, or digital integrity, which for other sectors will not be as relevant. So excellent. Well, Tom, I'll stay with you then, and I just wanted to ask you a little bit, because in this rise, around ESG data, the attention that we bring to it, companies are very familiar with, of course, financial metrics. And here we're looking at more, also impact metrics. So there's been more attention towards that, and companies respond to that in different ways. So, at Vodafone, I wonder, has that led to some changes in the way you decide and how you treat reporting requests that come your way, changes in the way decisions are being made within Vodafone, even the very top, the board, or the way you are structured as a company? Has that ESG momentum, if we can call it that way, impacted your company and the way you operate?
Yeah, it's definitely momentum. I think momentum's a good word to use. I think the last, I'm sure everyone on the call will have been aware, the last couple of years particularly, there has been real momentum on the ESG agenda. And I think once, once you have these areas becoming more up, moving up the agenda, particularly from investors, they are becoming more financially material. And as things become more financially material, your finance function is obviously gets a lot more interested. And I think what's also clear is as these metrics become more important for our external stakeholders, that we really need to have the same rigor as we do for our financial metrics. And I think it's been too long that sort of ESG data, non-financial data, has almost been seen separate from financial data, and it hasn't been privy to the same controls, assurance, senior level oversight as our financial numbers. But I really see that changing, and I think at Vodafone, particularly, our finance function, driven from our CFO, is really starting to take much more ownership of our ESG data management. So, looking at how we're collecting the data, what are the different levels of controls we have. Our internal audit teams have been starting to look at ESG data for the first time over the last couple of years to really understand and build the quality of that data, the governance of it as well. How our audit and risk committee, for example, one of our committees of the board, is becoming more interested in the accuracy of the data that we're putting into the annual report. So I think the stars are aligning in a sense, but I think it's been great to have because ultimately it's in the expertise in the organization when it comes to reporting is in finance. I mean, this is their bread and butter, to have to make sure that the business has got quality data that's collected in a timely way. So to start integrating that in for our ESG and so non-financial data it makes a lot of sense for us. But I think you obviously need that clear buy-in from finance to do that, and unfortunately our CFO has really kind of driven that.
Right. Sorry, I'm just gonna. I see I've seen a couple of hands up, so I'm just gonna remind people in the audience. You can, if you have a question, you can type it. There is a Q&A function at the top of the screen. If you type your question there, then we will see them here on our side. And if we've got time, we'll make sure we can answer a few questions at the end of the panel. All right, excellent. Let me go back to the panel. Robert, I'm going to come back to you. Staying on this topic of ESG data, which is, obviously growing and evolving, and as more companies report, you have it's also more automated, you have a breadth of data and consult, how, I'm also wondering, how is that impacting or maybe changing, the dialogue between companies and between investors, as we get more indices that are really become sophisticated. Is there still a role for dialogue and between investors and companies? How is that changing?
As we all know, regulatory efforts and investor pressures in general are driving better and more transparent disclosures. We're seeing it right now. This effort that we're talking about here today is an example of that. But despite, I think lately, and Tom referenced this, there's been a lot of momentum around ESG, but it's had a little bit of a hiccup, I think we've all seen over the past couple of months with what's going on in Ukraine and inflation and so forth. But I think in general, we're still going to see, once this economic shock subside, we're going to see that momentum pick up again. There's very real ESG issues out there like climate change, et cetera. They're going to continue to be with us. And I think that over the next 5 to 10 years, the ESG footprint of an investment will be almost as primary to its description as the asset class that it's in. So I expect that the notion, for instance, of ESG themed funds will eventually just kind of fade into the background, as all funds are going to be assessed on their ESG characteristics, and the supporting analytics that we're starting to develop are going to enable investors to more easily choose targeted and thematic ESG investment products. And what this means for companies and investors is that the level of disclosure, I think, and discourse will inevitably resemble the same type of reporting and reporting standards that we have today around corporate financial statements and earnings reports. So by that mean we have, right now we have very specific regulatory and industry body standards from the SEC, the FCA over in the UK, et cetera, and around GAAP accounting principles that really drive that reporting and make it standard. And that means that the transparency is going to be higher and more aligned within a given industry, but it's still going to be subject to pockets of gray, kind of like the tax code is right now. So I think the dialogue between companies and investors are going to be more targeted and fact-based, and hopefully better frame that transition tracking analytics that retail and institutional investors are really striving for. And I think it's important to note that efforts like what you're doing here, having the industry association be involved, that fosters buy-in by industry participants. And that's, I think, critical to driving this eventual standardizing and customizing of meaningful disclosures.
Yeah. Marina, oh, sorry, Todd, you want to...
I just want to add, again, yeah. I couldn't agree more with Robert, and especially from the investor perspective, but maybe, Alex, another angle on your question is, of course, transparency is mission critical. And as sophistication grows, and Marina and Tom are perfect examples, every mobile operator, every public corporation, in the future, every private company is leaning into these matters and wants to know more and more about the granularity. And the investors want to know more and more about the granularity. And so there will be, one of the premises of what we've seen and what we've been designing and building for about 2.5 years is our tools to allow for direct engagement at the data itself, right? So if Tom and his team of finance and audit committee and risk committees and the CFO office wishes to manage their data, ESG and climate data, with precision and control internally, and then if and when they wish to deem that data to go public or private, they should have click of the button access to be able to communicate with, as Rob said, the investor markets, institutional retail. So there is going to be much greater need for transparency, digital data submissions with precision, and then know who's requesting the data and why. And then Tom and Marina can put documentation to say, oh, you want to know my scope 1, 2, and 3? Well, here it is, right? Give them the digital data itself. So transparency, direct engagement, that's going to be increasing in the next few years, regardless of regulation. Could be helped by regulation, though.
Exactly, I was going to come to that. Maybe we'll be helped by regulation. Marina, maybe it's a good segue into bringing you back into the conversation. Like, how do you, like you mentioned before, sometimes the challenges, or like the specificities of some emerging markets, and so how do you, there's a lot of talks about, in the spirit of transparency, pushing more universal regulation. So how do we balance that, like universal regulation and mandatory disclosure, yet, keeping into account some of the specificities of, in some of the markets where you operate? Like, that's something that must be keeping you very busy and, awake, I'm sure.
Thanks. I think just in terms of global standards, it's really, I think it's encouraging to see that there's a movement towards a convergence of international standards. So I think that's one really great move that we're seeing at the moment. But we still think that having a very telecommunications-based approach like the matrix that we have here will remain important and relevant. When it comes to regulations, it's quite interesting to watch the developments that are happening both in the US and in Europe. On the African continent, it's a completely different story. You are starting to see regulations coming up on a topical level. You'll see, like in South Africa, it's got the climate change bill that's coming up. They've got carbon tax and so forth. Nigeria is putting together framework around that. There's a lot of regulation coming up on e-waste and so forth. So I think at this stage, we're seeing it being more topical than much more at a global reporting kind of level. So the movement is not so much around reporting, it's around how do you meet the needs of the African continent. If you look at climate change, we always say, yes, climate change is important, but for the continent, is it more around climate resilience as an example? So it's important to continuously look at the context and look at the evolution of the landscape going forward.
Great. Okay, I'm gonna just have a look if we've got any questions on the chat. I don't see any just yet. So I'll carry on, but please type them if you have some. And that's probably an open question to the four of you, but also part of this exercise is obviously we want to be able, probably longer term, to show a correlation really between you're a high ESG performer as a company, and you link that to high financial returns, which is, we hear a lot about that in theory, but it's still difficult to really quantify it. So I'm keen to if any of you want to share your thoughts around how do we actually get there. There is obviously a time component, being able to track and measure over time. But any thoughts from anyone? I don't know, Robert, if you wanted to.
And because, quite frankly, the data is still not so good for investment managers, a lot of the products, quite frankly, aren't very good either. And in terms of having a true ESG footprint, what you got really is a lot of tech and growth names in most of the major ESG products. They basically just focus on the top 5 holdings in the S&P 500. And so that means that they've done really well during that period of time when growth and tech were doing really well through 20 and 21 particularly. And they've done really badly so far in the first half of this year. And really, when you think about it, the true ESG innovating companies, the real true kind of green energy companies and so forth, they're still kind of mid-cap companies. So even in a portfolio, they don't represent very large footprints, and portfolios specifically focused just on them are dealing with kind of that long run path that you need to actually hold on to those investments while they kind of hit their stride, if you will. So I think the jury's still out. We've seen a lot of positive reports on, again, positive ESG performance. But again, I think it's really driven by the fact that right now the funds aren't really strong ESG footprint funds. And we're going to see, I think, over time, it's going to get better with the data, quite frankly.
Yeah. Todd?
Yeah, I'd love to just add, again, complement what Robert was saying. Yeah, there are a lot of complexities on the investment markets, right? Asset class specifics, all the complexities of portfolio construction. There's a lot of different ways in which one can build a fund solution, right? An institutional fund or an ETF. And so what I've been most concerned with, and one of the projects that we're designing and building, is to ensure that, the investment managers and those who are designers and builders of products can have the greatest tools. But also it's important for the corporate entities, public and private, Marina and Tom, to have direct access to not the complexities of asset class, right? Because there's, you can spend years in PhD deconstruction, attribution analysis on asset class specific, but I'm not sure that Tom or Marina and their boards and their CFOs want to manage for that, right? It's almost impossible to draw the connection to performance in an asset class specific vehicle performance. What we want to do is have corporate strategy and all the teams within the corporations be able to have a set of metrics like the ones GSMA. It could be the WEF plus GSMA 10 that would allow that corporate entity to manage those metrics and then have some kind of general assessment, right? Not asset class specific, but tracking, trend analysis, how are we doing? And then at the corporate level, how are you doing relative to your peer group? How are you doing relative to your competitive peer group? You can select your peer group, you can select the industry. And just on these metrics, not asset class specific, not portfolio construction dynamics, that should be an attempt to allow for us to, Alex, answer your question from the corporate perspective. What's best for them? Markets are always going to be able to have some of the best engineers, financial engineers, doing asset class specific and making claims. Hopefully those claims are regulated, but the corporate entities need better precision control and tools.
Yeah, and hopefully over time being able to measure the progress and then direct also as a company your investments to support your strategy in X, Y, and Z.
I just add one quick thing onto that, which is I think also looking at ESG metrics and performance, not just with a risk lens, which I think maybe has been the more historic approach, that, you know, the questions have really been around, well, how are you reducing your climate risk, for example, or what you're doing on supply chain risk. Whereas I think, you know, looking at these metrics, in particularly around areas like digital inclusion, which is about, you know, a metric on growing the population coverage by mobile network, or having more propositions which are going to be growing for new audiences, or making connectivity more affordable. And you know, at Vodafone we have a target around financial services as well, and M-Pesa. These types of things are a huge commercial opportunity as well. And if we hit you know, if we up our performance on these metrics, if we hit our targets, that itself is a real commercial opportunity. So I think it's also worth, you know, looking at these areas with an opportunity lens as well, not just maybe the sort of more historic risk-based approach.
I very much like this point, Tom, like linking, you know, what can be considered an ESG issue of risk into a business opportunity and a financial opportunity. I've got some questions now coming on the chat, so I'm gonna, there's a question coming from Singtel, I believe. On a somewhat related note, besides ESG metrics and performance, are investors, so that's probably a question to you, Todd and Robert, are investors remotely interested in SDGs? I guess, you know, you can link SDGs into, it's a framework, you know, for ESG in a way, but is that something that comes in your discussions with investors and financial institutions?
I think it does come up, absolutely, because they've just gotten quite a bit of exposure. I find that of the 17, that not all of them are super investable at the end of the day. So some are challenging to actually tie an investment metric to all of them. But certainly I think companies properly subscribing to the core values of the SDGs are something you want to try to prove out that case. But in terms of making investment metrics out of all of them, I find it quite difficult. And in my mind, I'm not sure necessarily they were developed to be tied to investment metrics at the end of the day. It's very much in the PRI framework, where you're looking for good best practices.
Yeah, I mean, just again, complementary, exactly agree. You know, I think the SDGs has a long history, and everyone is supportive of, you know, the ecosystem, the stakeholder community, and we want to do as much as possible. But are we seeing investors, institutional grade investors, going all in around SDGs? There are examples that, you know, we have some Dutch leaders in the field, and then I think Bridgewater, the hedge fund here in the US, is of course built and designed an SDG strategy. So we know there are some investors designing and building around SDGs, but it's definitely on the list of priorities of the top 10 frameworks that are being used and adopted by investors. It's much further down, right? We have TCFD adoption, SASB adoption, WEF adoption, and the frameworks go on. And then when the IFRS, ISSB comes in, you know, all of these are going to be the front and center set of metrics and frameworks. And to Bob's point, it was not designed and built for that, right? Let's not, I mean, not to be critical, but the SDGs wasn't designed and built to move capital markets with materiality front and center.
No. And Marina, do you want to comment on that?
I just wanted to add that I've actually seen some instances where we've been reached out to by certain, you know, investors, where they've actually asked us to break down our contribution towards each SDG in financial terms. So as I saw that, I was reflecting and saying, yeah, it may not be common, but could that be starting a new movement of saying, you know, what is the direct financial contribution that organizations are making towards the SDGs? But I fully agree with the colleagues that I think 17 SDGs, that is significant. And we've always been of the view that whilst you may touch on all of that, you probably have more severe impact and contribution around particular ones. So I thought it was quite interesting that we're starting to see it. It may be very small scale at this stage, but who knows where the future lies.
Yeah. and there are ways where you can link it, right? I mean, it's not, I agree, I think the SDGs were not developed as like financial metrics, but, you know, like if you talk about climate as one of the SDGs, then you can link it to an existing metrics framework and maybe find a way to show the correlation there. I'll take one last question and then we're going to come just at the end of the event. But it's a question maybe for you, Marina and Tom, like as which is coming from a smaller operator which would be at a less mature stage on its sustainability journey. How would the experienced operators, so we'll go with you, MTN and Vodafone, recommend to approach reporting? So would you go straight to like these like 10 KPIs that we've developed, which are industry specific, or you start with developing, for example, GRI, SASB metrics, and then build on from that? How have you approached that in your company? Marina, maybe you want to go first.
Yeah. So I think the key thing is to undertake a materiality process first. And that's why, I mean, even in the working group on the GSMA this past week, we were talking about the importance of materiality. So you can always use the basis that GSMA has developed on the sector-specific materiality, determine what's important first to your organization, the priorities, and then start looking and say, okay, what are the key performance areas and how do we report against that? Like the two gentlemen have said, both Robert and Todd, the key is transparency and disclosing as much as you can, because ultimately that is what will differentiate you. And I think there's innovative ways of reporting. You don't always have to take like a report approach. You can look at, you know, matrices, fact book, you can use your website and so forth. When you engage with a lot of the ESG raters and rankers, they take all of that into consideration. So think innovatively and then just be driven by this very clear materiality process of what's important, where's the greatest impact and contribution that you're having as an organization.
Thanks, Marina. Tom, you want
to? I mean, I suppose I'd also just say I think these KPIs would give you a very strong foundation from where to start. So I would, because you know, depending on your context, but actually once you've done your materiality assessment, it will probably still be quite aligned, broadly aligned to actually these 10 KPIs. So if you rather than sort of diving straight into GRI, I'd recommend at least starting with these key ones, and then building from there, because, you know, I completely agree. We want to be as transparent as possible. So not necessarily seeing this as kind of job done, just reporting against these KPIs, but I think they are a really good place to start.
Great, excellent. Well, I think we're just on the hour, so we'll stop there. I'd like to, you know, thank you very much again, Todd, Robert, Marina, Tom, for joining us for this panel. Very interesting to have your thoughts on this topic. You know, I'm reminding that we have this consultation open until the end of September. You can find the white paper, the metrics, on the GSMA website. Feel free to reach out to us as well and to, you know, send comments on this work. We'll be looking to bring, you know, more dialogue such as this one in the autumn, and organize more webinars to bring different, to really like enrich the dialogue. It's the start of a journey. And as we heard, you know, transparency is key. Data is necessary to be comparable and to track progress. And ultimately, what we want is to drive impact. There's no point reporting just for the sake of reporting. Thank you as well, Praveen from EY, for being our partner on this work and joining us today. And thank you, everyone online. Hope you have a great rest of the day. Thank you very much, and bye.